It's a real pleasure for me to be here for the first time, invited by Aaron, on something which speaks to me, because if there are two words which are ringing a bell for insurance people, it's sustainability and resilience. Sustainability because we want our customers to live a sustainable life, and if by accident they can't, we want them to be resilient as quickly as possible. And having this conference here in a city which a little more than a century ago, in 1906, was destroyed at more than 70% by an earthquake, and where insurance companies paid for most of the reconstruction, is an interesting coincidence. So what I want to share with you this evening very briefly, because I think I have around 20 minutes to do it, is the way we look at the world, why we think that we are really, as some people say, entering the second half of the chessboard, and why this is raising interesting questions in terms of both sustainability and resilience. In fact, insurance historically has been used to live with these two words because the very principle of insurance is really to, if sustainability is not possible, create resilience. In fact, historically, insurance principles, insurance companies were playing with two things to mitigate risks, with space and with time horizons. What I mean by space is one of the ways to mitigate your risks is to share them with other people. You can do that geographically, you can do that vertically by businesses, by affinities, but the very idea that sharing risks was a way to mitigate them is nearly as old as business principles. You may know that insurance started by maritime insurance when some of the people who wanted to send ships abroad were not ready to take all the risk for themselves and wanted to share them with other people having some capital to, in case of accident, share a part of the burden, but in case of success, share a portion of the reward. So this very first principle, space, is as old as insurance. The second important principle is the time horizon. It relies on the very simple and basic idea that in certain cases, if you start early by setting aside some reserves, some money, you can deal much more easily with the issues which are going to come later, because saving gradually is going to enable you to have what you need later on. And insurance companies have been doing that on the life side for decades, if not now centuries. So there is nothing new about the, I would say, the essence of the principles. What is new now is that we are clearly, at least from my standpoint, entering into the second half of the chessboard. Everything is getting bigger, everything is getting more volatile, everything is getting more contagious or is transmissible in a much faster way than before because of the technological evolution of our world, but also because of the world we have created ourselves through some of our behaviors, and there I speak, obviously about climate. This could be seen as being a real threat to our societies. And if I contrast that to what happened in this city in 1906, I would say that what we have seen in 1906 is the old world. The old world in terms of size of the event, and the old world in terms of type of solutions to address that. The events we are going to see, or we are starting to see, as I said, are growing in importance and are becoming more and more disruptive. We have more volatility, we have frequencies which are increasing, we have severity of the events which are increasing, and the transmissibility of the events is sometimes greater. I don't know if some of you have noticed, the weekend before last, there was a very big hurricane called Priscilla. Always nice girls' names for horrible things. That's one area where I would like to see less female first names. But Priscilla was a nice hurricane it was a hurricane with wind speeds which were the highest ever recorded. 350 miles an hour. At 350 miles an hour, nothing resists. Absolutely nothing. There is not a building resisting, nothing. So the reinsurers and the insurers were slightly concerned, as you may imagine. Unfortunately enough, the violence of the storm decreased just before hitting the Mexican coast. But what it means is the severity of the events is increasing. The frequency of the events is increasing. We see more and more of them. It's exactly like in the vineyards. I mean, you have the harvest of the century every 3 years now. In the wine business, it's helping sell the bottles at a higher price. In the insurance business, it's not that pleasant. So frequency increasing, severity increasing for climate. We have other disruptions. If you look at human beings, the risk of global pandemics is increasing because the transmissibility is higher than before. People are traveling more. The speed at which bad things can travel is getting bigger. You will remember that what Europe called the Dark Plague in the 14th century was basically initially transmitted by people who were traveling with goods from one place to the other. So this is growing. Longevity is increasing, which has some very good aspects, but also some more challenging ones, because how are you going to deal with the social consequences of an increased longevity? There are some very good ones, but there are some more challenging ones in terms of employment, in terms of ability to pay some of the benefits which have been promised. So we are really at the phase where, for a growing number of people, because the emerging countries are part of this game, the second half of the chessboard is coming. As insurance companies, how do we have to look at this? And how can we be not part of the problem, but part of the solution? And is there a solution? My viewpoint on that is pretty simple. Yes, we are seeing growing threats, but at the same time, if you understand the way we can use new technologies, we have new solutions coming. And we can be part of this game because the very nature of our business is giving us some ways to understand the issue slightly better than people who are not in this sort of businesses. And the way I describe the role of insurance companies, and forgive me for being that naive and that simple, it's very simple. We are like human beings. We have one brain, 2 arms, 2 legs. And we can use these 5 elements of the body to act, understand, and react. The brain is our risk management. The role of insurance companies is to understand risks, to identify them, to price them, and to try to mitigate them or adapt, adjust to them. Risk management is making big breakthroughs these days thanks to technology. I'll give you a very simple example. When I started with AXA a little more than 25 years ago, the way we were building models was, sophisticated at the time, but seen as very, very prehistoric today. We were using deterministic assumptions. Basically, we are creating models which were giving us an output, most of what we were, making as assumptions. Today, of course, it has changed. For a little more than 10 years, we've been using stochastic models, much more sophisticated. For any significant event, we can run tens of thousands of various assumptions to try to understand what's going to come. The ability to predict, the ability to understand the risk is much bigger than before because the power of the machines has changed by a factor which is huge. So better risk management is a great factor of both sustainability first and then resilience. That's the brain. The two arms are quite simple. There is a traditional arm of insurance companies. Most of them are seen as companies who are there to pay claims once the disaster or once the event has happened. There, digital is helping us change things because the relationship with the customer, the relationship with the people who have suffered an event is facilitated by the new technologies. I mean, if you have a mobile phone, it's much easier to know where you are if you've had an accident. If you are an old person alone in your home, the ability to take care of you at distance is much easier what it used to be. So even in this very traditional aspect of the insurance business, technology today is helping us build better solutions for the customers, and I think we are just at the very beginning of the evolution. But of course, even if it is today the portion of the business which is the most visible and probably seen as the most useful by the customers, what we would like to see the other arm being better understood and more developed, and this second arm in terms of perception is for me the first one in terms of importance. It's called prevention. Prevention will make significant breakthroughs in the years to come. Why so? Because big data is changing the way we can understand and analyze risks. Basically, the DNA of insurance is to gather data to try to understand what's going on or what could happen. The traditional way we were underwriting, we were therefore identifying and pricing the risk, was, when compared to today's technologies, approximately the equivalent of designing a buffalo in a prehistorical grotto. It's nice, it's artistic, you can recognize a buffalo, but it's not a totally accurate representation of the risk. You know it's a risk because it's a buffalo, and I can tell you by experience that buffaloes can be pretty dangerous, but it's not really them. What you have now with big data and tomorrow with connected objects is a possibility to move from this artistic representation to holograms real time. Therefore, you will be in a position to understand much better what's going on, and you will be in a position to price the risks better, to prevent also them better. Because by definition, the risk is the addition of the unknown and the hazard. And not all of the unknown is hazard. A large fraction of the unknown is just the unknown. You don't know, and if you were to know, you would be able to understand and to correct and to adapt. And so I could elaborate on that for hours, but just I want you to understand that prevention in the years to come will take a very, very different dimension, because we will be able to understand real time and sometimes in advance what's going on. We'll have massive implications on the way we insure goods, of course, machines, automobiles, but also on the way we insure people, because health insurance, therefore, is going to change, and I'm convinced that many people will be ready to share their data if the quid pro quo is that for that, they will be in a position to better face their risks. Of course, it's raising very profound ethical questions on the way you use data, and this is, I mean, the quote Aaron was referring to, but this is going to really change the business. We will have to demonstrate that increasing the prevention side creates a business proposition which is viable from a commercial standpoint, which is a different question and also an interesting one. So these are the two arms, service, prevention. We have two legs, which are the two sides of our balance sheet, the liability side and the asset side of the balance sheet. On the liability side of the balance sheet, what is it in reality? It's the addition of the risks we are taking, from our customers and putting on the shoulders of our balance sheet and therefore of our shareholders. How can you use that to change the picture and to contribute to sustainability and resilience? Pretty simple. We have to reflect in our products the way we want to influence behaviors. So can we adapt our products to the behavior of our clients, and is it appropriate? There are limits to that, of course, because the principle of insurance being mutualization, if you go too far and only take what you think as being good risks, then there is no mutualization anymore. But there are two things which I would say are setting limits. I think it's perfectly appropriate to differentiate the pricing when the behavior of the client is a behavior the client decides to have, as opposed to a behavior on which the client has no influence. If you decide to drive drunk, I don't think it's fair to have you pay the same price as a driver who drives without drinking, very clearly. So the point I want to make there is that through the liability side of the balance sheet, for people but also for companies, we have a way to influence resilience. I'll take a very simple example as far as companies are concerned. Do you want to insure companies who have business propositions, investments, machines, products, which are not contributing to the sustainability or to the resilience of our societies? Do you want to insure companies which are consciously polluting? Interesting question. Should they not be charged much higher rates than companies who are not? It seems to you to be obvious. It was not that obvious a few years ago, and I think it's developing. So the liability side of our balance sheet is a way to influence. The asset side of our balance sheet is a great way to influence, because if you look at insurance companies globally, they are the largest institutional investors in the world, and they have a long-term horizon. Why so? Because the duration of the liabilities being a long one, we need to have long-term assets. And because we need to have long-term assets, in the way we pick these assets, we can be selective. And I think one of the ways for us to increase our contribution to sustainability and resilience is precisely to integrate in the way we manage the assets criteria which are going to create this sustainability or this resilience. That's why, as AXA, we have announced, as Aaron knows, a few months ago, the fact that before the end of the year, we would have sold all of our remaining coal investments, and that we would have tripled between now and approximately 3 years from now, our green investments. Why do we do that? Of course, we do that because we want to be at the forefront of the battle, but also because we think that economically it makes perfect sense. We do not want to invest in business propositions which are not going to be sustainable, because this would be bad for our customers. And if we make bad investments, the outcome of that is going to be that the products on the liability side are going to be more expensive. If I'm not able to have a decent return of my investments in the long term, my products are going to be more expensive than needed. So deciding to, I would say, integrate environmental criteria into the asset side of the balance sheet is important. We will also integrate these criteria, going forward in the investment choices we make, and we will measure the carbon footprint of our portfolio to know where it is, to benchmark it, and to be able to track the evolution. We think it makes perfect sense, and I think there is no contradiction there between, I would say, the intentions of creating more sustainability and the profitability of the company. The comparison I'm taking is quite simple. Do you want to be the one investing in tobacco companies in the late 50s? If not, better look at your portfolio and take the decisions. So I think it's creating a very interesting model, and I hope that COP21 will reflect that, because what it shows is that very large financial institutions who, from the outside, can be seen as being far remote from these issues, from these environmental issues, in fact have a very significant role to play if they want to contribute to the solution, because they influence the investments, they influence the cost of capital, and they influence the sustainability of the business models. If nobody wants to invest anymore, or if none of the serious investors wants to invest anymore in some business propositions which are seen as unsustainable from a climate standpoint, it's going to make the cost of capital much higher for these businesses, and therefore it's going to reduce the amount of investments. So it's creating a sort of virtuous circle. And that's why I would say I want to conclude on an optimistic note. Yes, it's true that the world is becoming more and more unpredictable. Yes, it's true that the frequency of the events, that the risks we are faced to are becoming bigger than before, but never have we had solutions at our disposal which, if effectively used, were that powerful, and never have people so well understood the fact that some very large institutions can be part of the solution and not just passive observers. This is what I wanted to share with you this afternoon. Usually speaking, insurance executives are used in conferences just after the lunch because they contribute to the very, very quiet nap of the audience. I am very grateful to Aaron to have given me a slot at the end of the afternoon, and I hope you're still awake. Thank you very much.
Thank you very much, Henri. That was just terrific. A lot of interesting, careful there, a lot of interesting topics to dive into. Here in Silicon Valley, there are a lot of disruptors, a lot of companies that are looking to upend the large companies like AXA. Leading such a big company, you're the first or second largest insurer. How do you make sure that not just you, not just your management team, but the entire company is looking nimbly at how the world is changing and adapting your business accordingly?
Yeah. Of course, it's a challenge in, both large and successful companies to convince people that they have to be ready to change. What I'm trying to explain to the team is that the world has become totally asymmetric, meaning that never have so few people be in a position to threaten so many of them. It's true, in the security landscape. Two terrorists can threaten a whole state. It's true in the business community. Two young guys, age 18 and 19, can threaten business propositions which have been established for 100 or 150 years. So it's not because you are large and successful that you are invulnerable. In fact, the risk is higher than ever. On the other hand, if you look at our sector, we are, with Allianz, I mean our German friends, the two largest insurance companies in the world, and we have approximately 2.8% each of the market. So the way I put it with the teams is to say, well, our 2.8 are really threatened. It's a great news, because the reality is that the 97.2 other ones are threatened too, and if we are the disruptors, our market share can be multiplied because we can access a very significant portion of the 97-something.
Excellent. Let's talk a little bit about data privacy, which you mentioned. You talked about a world in which people can rely on prevention more than just a payment of a claim after something happens. But that relies on behavior change. So it seems to me there are different dimensions. First of all, what data do I provide to you in terms of what I do? Secondly, do I really accommodate my behavior based on the information you may be able to provide me? And then number three is that there's the element of connected devices, as you say, connected machinery that might, to take the example of the drunk driver, lock me out of the car. So how do you see human behavior changing? What tools can you use? What are the trade-offs? Tell us a little bit about how you think about all that.
First I think that the education is going to go fast. Many people do not realize the value of the data, the value of their own data. I'm always surprised when someone wants to access a service at the speed at which everyone is ticking the box on the general conditions, generally 32 pages, which you don't want to read, so you immediately tick the box and you give away for free all the information on you and possibly on your family and so on and so forth. But I think this is not going to last for very long because the standards will increase. I think companies will be forced, if they want to, I would say, keep the trust of their customers, they will be forced to think hard about what they can do and cannot do with the data they have access to. We have committed, we as AXA, we have started to think about that, as you know, 2 or 3 years ago, and we have made a very, very clear commitment that, as an example, we would not sell outside the company the data we have on our customers, because we think it's a frontier we do not want to cross. Even if this data has value, we do not think it's in the interest of the customers to sell it, and so we won't sell it. I think it's important. The other element which I think is extremely important is you will have to be able to demonstrate at any time that you have a very strong alignment of interest with your clients. If you start to use the data in a way which disaligns the interests, then I think you will have very significant issues. So if you want to be comfortable, when you use the data, ask yourself the question, are the interests aligned? If the answer is no, or if the answer is uncertain, think twice. That's another point. What could I say? Also, on the use of data, I think it's going to be a sort of learning curve. What is very clear today is that there are differences between using data aggregated and anonymously, and this is most of the time absolutely legitimate because it enables you to understand facts, to understand trends, to identify characteristics which can help you reduce risk without going into the privacy of individuals. And this is different from using individual data non-anonymously to target some specific segments.
If you have, there's 7 billion people in the world with many different opinions about privacy and data use. Can you imagine segmentation of products so that, I don't care about privacy, I'm happy to have someone, so I get one product and different level of privacy, I get a different product. Do you see that, the market segmenting in that way?
Well, I see that as perfectly legitimate because if you are ready to, the more you will be ready to share data, in principle, the less expensive the product should be, or the better the prevention should be. I mean, if some people don't want to, take a very simple example, automobile insurance, even if some people in the room will probably argue that it's not going to be an issue 5 to 10 years from now because there will be no accidents, because all the cars will be electrical and without drivers, doesn't mean that the risk is disappearing, because the risk is just going to move to something else, to the software providers. But yeah, it's obvious. The good news is the risk will be lower. But in the 19th century, we were insuring horses, and probably at the time, by the people who were forecasting the future, it was seen as a vanishing proposition, and they probably predicted the death of insurance companies by lack of horses. A century later, we're still there. So I think if you are ready to have an app on your mobile, which is enabling me as an insurer to identify the way you drive, I will be ready to offer you a lower price, because I will know how you drive, and therefore I will be in a position to tell you what you have to correct or whatever. If you don't want to share it, fine, your choice. But don't expect me to give you the benefit of things I cannot access. So I think it's a legitimate trade-off.
A lot of people cite the cliche that the younger you are, the less you care about privacy, or that privacy is dead and it's fading away. Do you believe that's true?
Yes, and I must say I'm not able to say, when I try to explain that and when I try to think about that, I think there are two elements. A combination of change in culture and lack of experience. And I'm not able to see where the needle is.
So we don't know, the 20-year-olds may not care about privacy until they're 30
Today,
or 40.
yeah.
Right. Okay, I'll call my kids.
Would you
and
be
ask.
proud to have on Facebook all what you did when you were between 16 and 20?
I'm asking the questions today. I would, by the way, just for the record. I think we're going to pivot to a new topic. You have a great quote, very simple, and I think it says a lot. A 2-degree world is insurable, so let's switch to climate. A 2-degree world is insurable, a 4-degree world may not be. Tell us
Will
more
not
about
be,
that.
for
Will
sure.
not be.
Yeah, because, the 2 degrees more complicated, but probably acceptable. Because it would mean higher sea levels, it would mean a lot of zones where, a lot of things would change. Some places may become deserts, which is not very pleasant. Maybe California will be one of them. If you look at the Middle East today, ask yourselves why most of the old Greek and Roman cities are in deserts. People were not crazy at the time. They were not building these cities in deserts. They were building them in places where the climate was normal. So climate change is real, and the change is accelerating. At 4 degrees, it's clear it's unsustainable because of where the sea levels would be, because of what the violence of the events would be. And just have a very, 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 very simple thing in mind. 80% of the world wealth and probably 70% of the world population is located within 50 miles of the coasts. So if the sea level goes up, look at what it would mean in terms of GDP destruction. So it's a proposition we cannot afford.
So it seems to me, and we've talked about this, the insurance sector has both great risk because of climate change, but you're also sitting on a wealth of information and insight. So what is the role for AXA, for the sector, in helping transition so that the uninsurable world doesn't come to pass?
Yeah, I think what we can do is pretty simple. I think it's part of our, quote, social responsibility to share the information we have with the broader communities, because if not, we are just not using a wealth of knowledge a wealth of skills which could benefit to the society, to the society globally. The second thing I think where we can help, and that's why I was using the example of the balance sheet, by the way we act, we can contribute to the change in behaviors. By making some products more or less expensive, depending on the behaviors, by deciding to invest or not to invest in some places, we can start to create or help create a virtuous circle which is going to contribute to the solution. And for me, this is one of the big hopes I put on COP21, if I may, for a second. Because I looked very closely at what happened in Copenhagen, and I look at what's starting to happen with COP21. I think there are three positive things which are gradually starting to emerge, and we will see if they come to a success or not 2 months from now. But the three things which have changed since the last conference are, first, the engagement of very large countries. Very clearly, the US were in denial last time, as was China. It's not going to be the case today. The quality of the dialogue between the poor and the rich countries has changed. It was caricatural last time. Basically, the rich were saying to the poor, you have to do the same efforts as the one we have to do. And the poor were saying to the rich, let us pollute, because it's the way you have become rich. And once we will be rich, we will enter into the discussion. It's not the case this time, because they understood that this was dangerous for them too. And the third thing, which is a point I wanted to come to, is we start to see a real engagement of the private sector. And I think it's of utmost importance, because the states can influence the regulation by, I would say, what they decide to legislate on, but the private sector is, in fact, representing 90% of the investment. And if you can redirect the investments, you start to create this virtuous circle. And it's happening because people are more conscious, which is one side of the game. And the other thing which is good is that you didn't have 5 to 10 years ago sustainable, quote, green business propositions. You start to have them now. What's happening in energy is interesting. I mean, solar is for me one of the big hopes, because you start to see the price of solar becoming, quote, commercial. And if this is the case, things could change faster than what some people think.
I mean, I would agree with you, and it was fascinating. You gave a great speech at the Climate Finance Summit in Paris in May, and where you made your announcement on coal, and clearly people were thinking differently about what the future looks like. And I assume it's hard-headed analysis of how the future is changing as opposed to a campaigning mindset, but it seems to have the mindset change across industry almost overnight. Would you agree with that, or how would you characterize the change in mindsets?
No, I think it's a pretty, well, I wouldn't say overnight, but I think the mood has clearly changed. And I think one of the very positive things is also the, at least the pressure of the public opinion, even in emerging countries, is now enough to make it something which is now high on the real agenda. I mean, it's much more than, I think now it's much more than lip service. I mean, people are taking it for real.
So you've taken various steps. Do you see this as, your steps as competitive advantage, or do you see a role of collaboration within the industry, insurance sector to have a larger influence on both business decisions and also policy outcomes? How do you propose to act?
I mean, it's both things. Of course, I mean, we are not a charity, we are a commercial organization. And my role is to develop the business in the most sustainable possible way. So I think that by trying to anticipate what's going to happen, I hope we create for ourselves a competitive advantage, even if some people are looking at it very cynically and are happy to see us being the first because they hope we will fail. Well, maybe we will, but if we don't, then it's going to be difficult for others to catch up. Having said that, I think we also need to try to embark, and other, I mean, large companies are doing very, very good things. I mean, some of the reinsurers, some of our competitors are doing good things. I think it's the role of the sector to contribute to the effort, because clearly, I mean, it's an area where, because of the wealth of data we have accumulated, we can see things very, very clearly. And I don't want us to be in a position where 10 or 20 years from now, if things are really, really bad, we would regret not to have used what we know to try to change things.
I'm going to ask a couple more questions, and then I'm going to open it up. And I think you can also ask questions using the hashtag, and I'm looking to Melanie, hashtag BSR15, if you want to ask questions via Twitter. So please go ahead. So the decision you took on coal earlier this year, do you foresee applying the same kinds of principles and thinking to other decisions that may be coming?
Yeah, I mean, this one was pretty easy, symbolic one. We already had decreased the investments because what was remaining when compared to the size of the balance sheet was not major. But what is clear, and what is, I think, going to change the behaviors is just the fact that we will integrate, ESR criteria in the portfolios and measure the carbon footprint. I'm a great believer in the fact that since mankind exists, if you start to measure, you start to improve. Because you measure against something and you don't want to, let's say in competitive organizations, you don't want to look worse a year after. So if you start to measure, you start to put in place a sort of Pavlovian behavior where people want to do better.
You have said, and this is, I think, a very important insight, that the insurance sector faces the same challenge that sustainability advocates face. Encouraging people, incenting people to think long-term, and yet, as the quote from Mark Carney said, there is this issue, the tragedy of the horizon. At last year's BSR conference, quite frankly, speaker after speaker lamented the short-termism of the markets, and yet we're not sure about how to try to change that thinking. So coming from an industry that has to think long-term, do you have any thoughts about how other parts of our market economy might move in that direction?
Since you have quoted Mark Carney, who, he's a good friend, but I would say, there is one thing they could change. It's the way they look at the horizon when they speak about, when the regulators, speak about solvency and all these other things, because the short-termism is not necessarily the sort of stupid behavior of irresponsible institutions. It's also forced by some of the regulations. And when I look at the insurance regulation, not to be too technical, but the reality is that in our risk models to calculate the solvency, we are forced to take a one-year horizon, which I think is a stupidity, because it's reducing the amount of long-term investments we could make, and it's forcing the system to take a very short-termist approach, which is not justified by its business model.
And I trust you have conveyed that to the Governor of the Bank of England. Let me see if there are some questions. Yes, we've got a couple right over here. Mike is coming quickly. I hope the space in this room meets safety regulations. Thank you, and then we'll go right here. Let's take two questions back to back.
This morning, a colleague of mine sent me an email about the International Labour Organization's disability charter, of which AXA is one of the very first signatories, which is fantastic. But in a world that's as risky and challenging as you've described, when AXA has 1,000,001 other things to think about, how do you make time for what might seem like a tangential issue like disability inclusion within the business?
And let's take the second question as well.
Sure. Hi, you've spoken quite eloquently about climate resilience and risk. How do you think about, from an insurance perspective, other types of resilience and risk, like social and political resilience and risk? We've mentioned the refugee crisis that's going on right now, and I know there's been a lot of looking at how insurance models could be applied to violent conflict. So I'm interested to hear your thoughts on that.
Yep. First, one caveat there is one risk which is not insurable. It's the risk of war, because there is no hazard. Once you have war, the purpose is to destroy. So historically, historically and technically, it's impossible to insure war. Point one. Point two, your question is a very, very important question. Because if you look at the places where conflicts happen, most of the time it's because of fundamental disruptions, which can be social disruptions, but sometimes these social disruptions are coming from, say, much more, quote, natural disruptions. I think it's not, if we were to go to a sort of 4 degrees more world, then you would see tens of millions of climatic refugees. I mean, today we are seeing the political refugees. Tomorrow we might see climatic refugees. People who will not be able to stay in the places where they are just because the climate issues will not have been properly dealt with. One of the big questions for me when we try as a company to project ourselves in the future and to understand the way the world is going to evolve, one of the key questions for me is to try to understand what's going to create the stability of our societies. And the big issue for me is the sustainability of the middle class proposition. Because what has created democracies and stability is the emergence of a middle class between the end of the 19th century and I would say the first half of the 20th. Since the last decades of the last century, the middle class has accelerated its growth in the emerging countries, but is challenged in the mature ones. And why is it challenged? For a number of reasons. I mean, lack of structural reforms in some places, acceleration of the technological changes coupled with the lack of structural reforms in other places, like Europe. And if the middle class is not sustainable, then I think we will see a growing number of social disruptions, political and social disruptions. And therefore, I think that beyond the climate things, one of the things we also have to advocate for is, thoughts being given or reforms being undertaken to make sure that what has made the stability and the prosperity of our societies over the last 60 or 70 years in the mature countries without any major wars remains a reality going forward. It's not obvious because the pace of change today is such that it's a period which is probably very similar. I've used the metaphor 100 times to the Renaissance and to the Industrial Revolution. When printing, which is basically the equivalent of internet, was invented in Europe in the late 15th century, it generated a lot of progress, but also a lot of instability, because knowledge was spread in many more hands, and basically it led to 300 years of religious wars. When electricity and fuel oil were introduced in the manufacturing sector in the 19th century, there are whole sectors of the manufacturing industry which disappeared. Most of the textile industry in Britain went bankrupt before being reinvented. And this went with a very large number of social disruptions. Marxism came out of that. So my belief is that we are going to see similar things. It's going to generate a lot of productivity gains, a lot of progress, but not without a very significant number of disruptions. And these are things we need to prepare and anticipate. My biggest concern at the head of a very large company today is to understand what are the skills we will need 5 to 10 years from now. And they are very different from the skills we have today. And we employ 160,000 people. So I would say we are accountable for 160,000 households throughout the world. How are we going to make sure that these people still have a job 10 years from now, for those of whom who are not going to be retired? What do we need to do in terms of reskilling, upskilling, is a very, very big question. And I'm not sure I have all the answers. So to your question, I think it's something any large company has to take into account. I don't think you can survive in today's world if you are not able to project yourself 20 years from now. which doesn't mean you need to have an absolutely accurate view of the world. Of course, it's going to be different from what you project. But if you cannot understand the big trends, you will be catched by the wave. And if you don't want to be catched by the wave, better have given thoughts to how the wave might come. You will never know when it will come, but you may prepare yourself better. Sorry, I think I've forgotten the first question.
The first question, I was enjoying that answer so much, I'm afraid I have too. I think that was a crucially important point you were just making.
Please, yeah.
So glad it's stuck in your memories. It was, this morning a colleague informed me that AXA is a signatory of the International Labour Organization's new disability charter. So in a world that's as risky as you've been talking about, how does a business like AXA make time for something that might seem like a tangential issue like disability?
No, it's not a tangential issue. Why is it not a tangential issue? Because precisely, I mean, to the point I was making before, if you want to have stability and resilience in our societies, everybody has to have a future. I mean, what created the middle class was the hope that the future would be better. I see no reason to leave on the side of the road disabled people who are absolutely normal people with, most of the time, they have different abilities. I mean, it's a part of diversity. I mean, you cannot say that you want to have a diverse organization without addressing the disability issue. You have approximately between 6 and 8% of the people who can be seen as being disabled in a way or another. For me, it doesn't mean that they are not able to do things. It just means that they have skills which are slightly different from others. And if there is one sector which has to understand that, it's our sector. Because, I was speaking before about the before and after the event. Every year, we are indemnifying in the world approximately 8 million people. A fraction of these 8 million people who had, let's say, quote, a normal life before having an accident become disabled. Does it mean that they have to be left aside? I don't think so. So, because we wanted to show that this was something where we wanted to change the equation, we have taken this initiative.
Henri, thank you. Unfortunately, we're out of time. I think this has been a characteristically wide-ranging and very interesting discussion, and I find it fascinating all of the many intersections at which AXA is operating and the keen thought that you're bringing to leading this company. I don't know, are you interested in running for office?
Well, I mean, if I look at Donald Trump's hair, I don't think I'm fit for the job.
We'll get you a Make France Great Again hat for you. Anyway, please join me in thanking Henri de Castries.
Thank you.